I'm Jordan French, Grit Daily. Well, awesome panel. We all know why you're here, but Madalena Cascais Tome, let's have a seat with you here. Mattew Crummack, GoCo Group, better known as GoCompare, have you sit here. And Mr. Weir, TaskUs. Jaspar, let's give you a seat on the end. Maybe even tilt a little. Actually, I'm sorry. Leave it there. No, leave it there. It's important for the cameras. Have a seat. I just remembered. And then just a little bit of housekeeping. We will use Slido at Grit Daily. We do a lot of live journalism. It's just like this. And so we'll use Slido, which we'll be able to see, but you should be able to see somewhere up there. So we want your questions. You'll be able to upvote them as well. And then really quick, a big round of applause for Patty and the team at WebSummit. It's the reason why you're all here, and for the hardworking people behind that stage too. So big round of applause for them for putting on an awesome WebSummit. So let's dive right in because I'm really excited. Madalena, for the uninitiated, you are the CEO at SIBS, which is one of the most prolifically visible companies here, and in some ways subtle. It's on all our lanyards. And you have some news for us, 2 bits. First, on the acquisition front.
No, that I would not comment.
Okay, but you know there's an acquisition.
The big news that I have to share is that we have cashless acceptance points all over WebSummit. We have more than 300 acceptance points. So this year we have a really cashless event here at WebSummit, thanks to all of SIBS team that is here today. So
SIBS is around, just to get that back to repeat that back to you. SIBS is around. You're at every transaction point here. Is that right, Madalena?
Yes, it is.
And what percentage now is WebSummit cashless, you said?
I would say about 85 to 90%.
Okay. Is that a good thing?
I think it's a very positive thing, taking into account that this is a technological event. And of course, taking into account the route and the roadmap that we had in the previous years. But of course, we are working with WebSummit for the next 3 years to make it even 100% cashless.
Okay, and that sounds like there's a lot of data there, which brings Matthew in this conversation. For those who don't know, it's GoCo Group, but better known as GoCompare. In our minds, we generally know GoCompare is kind of like a review site, but could you actually unpack that for us, exactly what your flagship brand does, Matthew?
Sure. It was actually, we are 13 years old today. That was our birthday. We took our first transaction. Thank you very much. But it is a comparison site where consumers, users, fill in a form on themselves, really, information to buy things like car insurance. And for car insurance, you need to fill in about 55 questions in the UK. So you fill in all that information, and we give you pricing back from about 130 different insurance brands. And you choose which insurance brand you want, and then you click out, and you go and transact and buy that insurance policy. And we've been doing that for 13 years now, and the business has grown. It's very established, but it's very established amongst people who know what they're doing. They know what the 55 questions are, they know what their old bill is, and they like saving money. They love saving money. And it's about 1 in 5 of every British people.
It's a good overview, especially maybe historically of what you did, but you're morphing the company into what we all would call a fintech firm. So explain why you would do that.
Yeah, because we're talking to a very defined group of people at 1 in 5, but it's a very transaction, very marketing-driven existence. But it's not really talking to all these other people here who are not saving money, who are overpaying for basic services like insurance, home utilities, energy. And we needed a different way of thinking. We actually needed technology solutions, data solutions to drive the innovation, not just a new TV advert, right? And so we created a new business from nothing. We created new platforms, and we actually made some acquisitions as well to help us build that out. And the news we had a couple of weeks ago is we reached 250,000 users on that platform over the last 12 months, where we're actually, users outsource their decision-making to us, and we decide which policy they get, we decide which home utility they get, and it's like an automated switching service for them. And so that's a new thing for us. It's like a fintech business within inside a business.
Certainly, and we'll bring Jaspar into this because I want to look back at GoCompare and its economics, which were ferociously competitive versus the sort of fintech side of the business that we'll bring in Madalena in a bit. But the question to you is, you've witnessed this. Could you share some of the sort of the economics of GoCompare and perhaps some of your own clients, and that'll help illustrate what TaskUs does?
Yeah, sure. And first of all, I want everyone to know Jordan asked me backstage, why are you on this panel? And I thought that was a pretty good question before we went up. But we have a unique perspective. TaskUs offers customer experience strategy and outsourcing for lots of big fintech players and lots of big like challenger banks and cryptocurrency desks, as well as servicing large social networks and other big tech players. And so we do the customer experience for them. We are the people behind the interactions. And so what we've seen is that it's more and more important than ever to have every single interaction. If you're a challenger bank, for example, your only interaction with a real person is potentially when you call customer support because you're having an issue. And so we've got a unique perspective on what we're seeing from a lot of our customers.
Certainly, and GoCompare sort of witnessed that feature too. It wasn't a stranger. Just looking back historically, it's almost a ferocious fight on the marketing front. Certainly on TV, you would elaborate, and advertising and financial technologies is very different. Can you explain the sort of economic angle you're approaching, Matthew?
Yes. So this core business that we've got, 55% of revenue is spent on marketing, and it's a transaction-led business, and it's because people are searching for how do I get cheap insurance. And so if you're going into Google, into the dialog box and saying cheap car insurance, you're not a very loyal user, just by default, right? That's what you're searching for. And so it's a very, very competitive space because you're fighting over that discretionary business that's just switching and transferring all the time. Now, we've become pretty good at that because we use data analytics, we use good software engineering to improve conversion, all those things. But we wanted to transform that into a business where we actually had a long-term relationship with a consumer which could drive a lifetime value. And that lifetime value means that the customer stays with us and we're switching behind in the background the providers. It's free to use for the consumer, but we're actually keeping that in our environment, that user in our environment, and it's very different.
Well, and let's unpack the sort of architecture of that and the mechanics, because we can almost illustrate it. GoCompare is almost like a pool of data. You've had 13 years worth of just people searching and reviewing and comparing things, and that's something much like you could pipe and hose that into something. So how did you identify where you would sort of hose all of that data so that people could benefit from it?
Yes, so you got to almost architecturally kind of split the company into three. You've got kind of brands like GoCompare, and the automated brand is called Look After My Bills. Right? And you've got brands at the top which are just interfaces, right? They're customer experiences like you described. And at the bottom of the stack, you've got like interfaces into suppliers like insurers, energy companies. And that's really complicated because you've got like 130 insurance brands, 60 different energy companies, with all that data coming through, inventory pricing data. In the middle, though, is the really interesting bit, which is the platform which sucks up all that data, the behavioral data from users and all the information from suppliers, puts that into a big data pool in the middle, and we then stick services, API-driven services on that. And we're actually feeding information back up to both consumers through API-driven relationships, but also back to suppliers as well. So it's very much, it's a packed up interface in the middle there, but 3 layers really.
Yeah, and certainly so. And then to repeat that back to you a bit more, Matthew, that data you're piping into, for example, banks, the sticky relationship, the sort of interest-bearing or a checking account where people are always living, other services people move away from, but your bank account is very sticky, and you're offering to change up or save money on certain services. Is that right?
Yeah. So if you look at actually the most frequently visited interface really by users is their current account, their bank account, because they're looking at kind of what did I spend yesterday, what have I got left in my account. And so we've been investigating with banks, how do you take that middle bit with the APIs and plug that into the bank account so that users actually have the opportunity to switch within the account. And we've been beta testing some relationships like that about how we can take the information from somebody's bank account, pre-populate some of the question sets, and then make it easy for people to do from within that environment. But it's hard because traditional banks don't move that quickly, and they are quite difficult, to generate their own customer experience, I would say, improvements.
Well, we don't necessarily believe you on that point. Traditional banks have been around for a long time. They have a lot of money. They can practically print it. And Madalena, also for the uninitiated on SIBS, SIBS was formed by a consortium of banks, isn't that right?
Yes, it is the case, but more than that, we also believe, as Matthew, that customer experience is key in order to drive behaviors, to drive electronization, to drive digitalization. And in that sense, our vision, also in payments, as Matthew was describing, in price comparisons and contracts, we truly believe that payments, electronic payments, are a true means to save people's time, and time currently is the most important asset that people has. So we truly believe in building cashless experiences across all the different channels.
Sure, and that's great, and I think everyone's with you, and testament to that is the really high percentage of cashless payments here at WebSummit. But hearing what Matthew just offered up, it's almost a challenge to the banks in the consortium. Here he is taking this pool of data from GoCompare and funneling it into perhaps at least one bank partner, so that based off of the different prices for similar services, those consumers could save money. Shouldn't you, or are you doing that already too?
Yes, what we are doing as SIBS, because we are not a bank, we are a payment processor. In fact, we are one of the largest payment processors in Europe. What we do is that throughout our platform, which is a very powerful payment platform that is internationally recognized because of its integrity, we process payments across accounts, cards, tokens, wearables, whichever experience that you have. And by doing that, you can also lead to experiences that are more and more cashless. Let me give you an example. For instance, when you go to an ATM probably is the most traditional channel for cash disbursement. You can also have a lot of different services. For instance, in Portugal, we run one of the largest ATM networks in the world. I think it's the third one by number of users, number of ATMs per capita. And already less than half of the operations that we do in an ATM are cash disbursement, are withdrawals. And why? Because, in fact, we have been using the ATMs as automated points of sales, automated branches, also to deploy convenience services. And those convenience services are deployed exactly taking into account what is the customer profile and what is the customer experience that is more convenient at that point in time.
Sure, and one of the things that your customers give you a lot of feedback, it sounds like you have a lot of data. Isn't one of the things that your customers are asking you to help them do is save money?
I think typically what they ask us to do is to make sure our main target is to be as seamless as possible. So typically when a customer uses us, and I think that almost all of you already use the SIBS solution here in Portugal, you don't even see that you are using SIBS. We are very seamless, a very seamless user experience, and the fact that we are so seamless is in fact the greatest accomplishment that we can have. Also, what typically our customers ask us is to make sure that we are performant, resilient, and secure. When someone goes to pay, they don't want to pay, they want to buy, and they want to do it without even thinking. So the fact that they don't want to even think if the transaction is going to be performed okay is the best performance indicator that we can have to our customers. We leverage most of the information that we have also into making sure that these transactions are secure. This is the most important feature in a payment processing platform, is to make sure that the transaction happens end-to-end between the payer and the payee in the most secure and efficient way.
But can't you use all that data to do something like what Matthew's doing and save the customers at your bank partners money?
Yes, but payment data is very sensitive, and we value the confidence of our users and of our customers very much. So the fact is that most of
using payment data.
Yeah.
He's looking at it historically.
I think what's been really interesting in the UK, and it's different right in different markets, but it's to see the kind of battle between the new banks, the neobanks, and traditional banks. Because neobanks have created these beautiful interfaces like Monzo and Revolut and these beautiful account interfaces, right?
Sorry to interrupt you, Matthew, but the difference is, yes, of course, in a PSD2 environment, this is possible, and we are moving into an API world where open data is available. But in order to do that, you need to have your customer permission. There is something called the strong customer authentication and the customer permission in order to do that to use that individual data.
Yeah. But certainly, there are customers who would give you permission to use that data to help save them money, right?
Yes, and for those, that is possible.
So then perhaps this begs the question, Jaspar, from where you sit in a somewhat interesting situation. You laid some foundation earlier have enormous sort of client base that you use. We won't maybe name names, but they're some of the biggest ride-sharing, sort of hospitality, and other big network, social media network companies in the world. It begs the question, who should be working on this type of technology? Is it banks that should lead? Is it these sort of upstart, quasi moved into fintech operations, or should it be, perhaps someone else like your own clients who are old big tech firms?
I think what you see is these big tech companies. People ask, is big tech going to take over fintech or financial services? They already are, right? And if you look at countries like in China, how Alibaba launched Alipay, which now has a bigger market cap than Goldman Sachs, that could happen in the US. You take a company like Uber, for example, they're already a fintech company, right? They've got a captive audience and millions of drivers. 40% of those drivers, their primary source of income is Uber. Uber has an opportunity, for example, to build a financial services firm squarely targeted at this core group of consumers that are their drivers.
Certainly, but you don't count
Let me
what
just
you
add
could
on
do.
that.
You count.
I think that, in fact, the discussion about industry is more and more blurred because more and more integration and customer journeys are hybrid. So to be a transport company or a mobility company is less relevant, or a financial company or a bank. More and more industries are sticking together and developing integrated customer journeys. And that's where the real value is added for the customer.
We're still skeptical in the audience. Our inquiring minds want to know why you haven't already done perhaps what Matthew's done. And then to challenge you, that's not necessarily true. That your Apple Pay, your Alipay and Goldman example is a bit hyperbolic.
Mm-hmm.
There are instances where big tech has moved into a certain market and retreated due to fintechs that have succeeded. Is that right, Matt?
Yeah. So Google acquired a comparison business in the UK. They tried to compare insurance. They tried it for 2 or 3 years and they gave up and left. Amazon considered coming into the space this time last year. They considered it, and they didn't come in because it's messy down the back end. And the other thing that's difficult is the regulation, right? I am personally regulated. I'm sure you are too, Madalena. And being regulated means you have to follow rules. And I'm not all big tech companies love following rules.
They will, and they're not regulated.
They're not great at it, right?
The big tech companies aren't regulated in the same ways
Yeah.
that the financial services firms are, which potentially gives them an advantage. They also have the kind of capital that the fintech startups do not, where they can go and they can try something out. They can come into your space. They can do something, for example, like what Goldman did with launching Marcus and then having the integration or the support of the Apple Card. Goldman can afford to lend out $10 billion this year and spend hundreds of millions on that kind of partnership, where some other smaller financial fintech firms can't make that big bet.
Right, but that very statement's incongruent with what we just witnessed in Matthew's market. So despite the funding that big technology firms have, and despite that they are not, as you call it, subject to the regulation, which perhaps they probably are, they still failed and still pulled out of the market that he occupied.
Yeah, I mean, that's going to happen, right? But in other areas, they're going to succeed. Amazon, for example, has been lending to their marketplace customers since 2011, and that's a small part of their business. But you're seeing this time and time again. They're going to keep trying, and they might fail in some regards, but I think they're going to continue to move into, because they want to own the customer relationship. That's what matters.
And I know you want to weigh in here.
There's a big difference also between thinking global and acting local. And technology isn't everything. In fact, you need to know your customer perception, your customer behavior, in order to have a real impact in people's life and day-to-day life. And to be sure of that, you need to have a very inclusive go-to-market strategy, a very distinctive customer operation, and to be able to deploy the functionalities that each community, with each regulation, with different regulation, different rules, want to use.
Sir, but given that Jaspar and where he sits, he has a very good pulse on what big tech is doing because they are his clients. It does look like the enemy is at the gate of SIBS and its consortium traditional bank partners. So one of the questions is pointed right at you, Madalena, no pun intended, and that is, do you feel threatened as CEO by this fintech wave that certainly includes Matthew, who's already introducing data right into the customer interface where they could save money based off specific transactions.
Not at all. We truly believe that fintechs and to be also a part of people's life, we need to be able to work in this ecosystem. More and more, the word is collaboration. The word is to make sure that we have integrated customer journeys across the different sectors, across different players, and that for us SIBS, what is important is that our technology and our platform is able also to serve these different fintechs that are coming into the market, big techs, insurtechs, whatever type of tech that you have playing into the market, because that's the way to drive electronization, that's the way to drive digitization. Also to add to your question previously, we are also part of this open data movement. It's not just PSD2, because PSD2 started with a banking context, but more and more we promote that there should be an open data environment, and we have built the SIBS API market, which is an open market where we are publishing all these different types of APIs exactly to accelerate this collaboration and ecosystem, and to make sure that more and more digitalization can come to the markets that we serve.
Certainly, and appreciate the foundation there that you laid for the next question, which is some of the stuff that you might launch or do. Could you share that with us? One of the trends that's been upvoted so much, because we're going to have to ask it, and this will also go to you, Jaspar, just next. What trends should we watch out for in 2020? Perhaps you could share, Madalena, the tech that's on their horizon with this audience from SIBS.
I think that for sure the Internet of Things is more and more present. So to be able to pay as you do currently with your card or with your smartphone, but in the future, whichever wearable you want to use in exactly the use case or the context that we are in, will be for sure one of the big challenges. The other will for sure be open access data and access to open data across the different sectors. I think that the banking sector to PSD2 and the payment sector is giving the example, but more and more it needs to go across the different industries, and of course be reciprocates between fintechs and also between big techs and giant techs that are not European based, but also need to share their data.
So it sounds like you're going to IoT, open access data, just really broad ideas. And then Jaspar, over to you. I gave you the warning that's coming to you, again, given the pulse of what you have on big tech firms. What do you see coming right around the horizon? It's 2 months away.
Yeah, I think the big things is going to be regulation and whether or not some of these firms are going to be allowed to move into financial services. Take Facebook with Libra and Calibra, their financial services arm. I think it's going to be interesting to see what happens with the US government and whether or not these companies will be allowed to have these direct banking relationships with their customers. The other thing I see coming down the pipe is acquisitions. If you think about someone like JP Morgan and their technology spend, it's over $10 billion a year. That kind of money can easily be spent buying some of these small digital challenger banks, which I think are being built in order to sell to like a JP Morgan. So I think those are the two trends that we're going to need to watch out for the next year.
Certainly. Speaking of building things to sell them necessarily, this is practically directed at you, Matt. It's the most upvoted of next consecutive questions, and we'll have to end it. So we'll keep it short. As a fintech company, which you certainly have morphed into, or certainly trying to with GoCo Group, should you, as a fintech company, partner with a big bank or a big tech firms?
So we like partnering with the big banks because we can provide services which we think they really struggle to build themselves. We don't see big banks going away at all. They're a big part of society, but they need to be value added back, as we discussed earlier. They need to provide services which generate real value back to consumers. We can help with that.
So it sounds like a symbiotic relationship.
We think so, yeah.
An important one. Banks on the stage or consortiums are right around us and nipping at the heels of big tech. But that's all the time that we have. Please join me. Big round of applause for our awesome panelists. Lot to unpack here. That's Madalena Cascais Tome of SIBS, Mattew Crummack, GoCo Group, and Jaspar Weir of TaskUs. I'm Jordan French with Grit Daily.